Tuesday, September 3rd, market analysis, Stan Ehrlich. Good morning. So 9:42 California time. And wow, what a 3-day weekend will do for the market. We came up on many of the indexes, either making a new high by a very small amount, a new high close by a very small amount, just a second, or the combination, or coming close to, looking very bullish or bullish on Friday. And I warned you that this is a very critical level. You have to close, in my opinion, above previous rally highs. And it would be nice to get some follow through the next day in order to perpetuate an uptrend. Otherwise, this is exactly what happens. You end up with a very sharp break, very big down day, and in this particular situation, almost a downside breakout just over the weekend. So we have, in fact, I think a bearish engulfing on the E-mini with today's high, yep, being a little bit above Friday. And the low is below Friday's lows, Thursday's lows, and we're going to, in my opinion, break below the low of the last 2 weeks, which would create a bearish, yes, a bearish engulfing we already have. It's not a sell signal because we weren't overbought within the last several days. Now, it's just as damaging in my opinion, but not an official red like here and here sell signals. But I think we're going to be going down during September. I talked about this 2 or 3 weeks ago. September is a month when the market traditionally heads down in general. Not necessarily a lot always, sometimes a lot. In this case, I think it's going to be substantial. I'm not sure why. Everybody expects market interest rates to start falling, maybe 2 or even 3 times before the end of the year. And that normally is bullish in the market, but you understand it's built into the price that we have for the last couple of weeks. The market was expecting, and now we have to have it happen. And if it doesn't happen as much or as big or as frequent or whatever as expectations, it's a little bit bearish short term. I'm expecting a buying opportunity in October that will, I hope, produce the beginning of a nice rally through the balance of the year. And I expect it to be at least as low as the early August lows for all the indexes. So if that's true, some of these indexes have what looks like it's very close to a decent double top. But we'll talk about that when we get down toward the early August lows. Next chart is the detail, and we just a few moments ago made a minor new low for the day on the E-mini, and this is a 1-minute chart, and it was 3 minutes ago. So I think we're about to start what I nicknamed a waterfall type market, which is getting more bearish, faster, quicker, and straight down for a bit. Downside breakout. Any moment, so to speak. Spider. Not quite making those new lows. Gonna do it very soon. Next. Detail on the spider came super close. It's about to do it. QQQ has done it and is already dropping off quite a bit. We have a bearish engulfing ER sell signal on the high day for the last top in the QQQ. Great. We're still short. The green line represents the trade line from the entry of the trade to the current quotes. And this is an ER3 position trade. We have ER1 scalps and overnights, and we have ER3 scalps and overnights. This is an ER3 overnight. And the detail for the ER3 overnight on the QQQ is showing right now. This is a 2-minute chart, so I can give you a perspective of going back here 2 to 3 weeks. We're making new lows today. typically pretty bearish. Next, we've got the NASDAQ futures. We're short, high day, of course, like the QQQ, but not exactly the same, but very close because the trading hours are different. NQ, 23 hours a day. QQQ, you've only got from 9:30 to 1 o'clock California time. Much shorter trading time frames. Therefore, the charts look a little different, acting different, and different daily data ranges. Makes a big difference. So almost new lows again for the last few weeks on the NASDAQ. Heading south, again, my first downside objective, and it's the first. I could get a lot more, well, not a lot, more bearish if we start breaking those early August lows. Next chart. NASDAQ 5-minute chart broke the low from a week ago, just slightly, just a short 10, 20, 30 minutes ago. We're still short from that price right there, about 19,775, give or take a little, and doing fantastic. Next, we have the YM. Now, the Dow futures has what's closest to the double top formation. The two highs, the first one, we've got a bearish engulfing sell signal on July 18th. Unfortunately, we didn't get one on this rally high, and we were long from the low up to a few days ago. That was Tuesday of last week when we got stopped out with a very nice profit. So I'm hoping we're going to get another sell signal, but it does not look like it. We're now moving down substantially away from overbought. So I'm bearish to the tune at a minimum of 38,694, and I think it's going to end up being double that in terms of the amount of break, because of the double top formation. Now, the detail on the YM, the previous long trade from early in the day on August 9th to almost the low, we got stopped out, unfortunately. But, you know, I could have made more if I slowed the stop down just a little bit, but I didn't. And that's that. And I'm not crying over spilt milk. It was a great trade. Next, bullish engulfing. Russell made a little money, only lasted 24 hours. I think it's going to do the same thing as the other indexes, but it's not quite the same chart. It's significantly different, but I do expect the early August lows to be challenged, and I'm thinking in every case, the indexes, that is, we're probably going to break it. Russell, short-term, 5-minute chart, new lows for a week and a half or so, coming down to a little bit of support, but I think it's going to get broken. And now we're going to get into the interest rate futures. Now, I'm a little surprised that bonds are up as much as they are today and the market's dropping down that much as it is. So we've got a little bit of opposite direction at the moment. I'm a technician, not a fundamentalist, so I don't know why interest rate futures are rallying, nor do I really care. I don't think it's going to last. I think it's going to turn down and start to make new lows, maybe this week, very soon though. And I am looking for a low in this green circle, which is during the month of October, and the high and low of the circle are obviously a price range. So that's my objective, and a turnaround to start another bull move up that will make new highs for more than a year. Break the highs we've seen for the last, I don't know, almost 12 months plus. But that's after it comes down into October and then starts to go up again. 10-year notes is the same thing, rallying today more than I would have guessed, and I don't think it's going to hold. I think it's going to turn down to new lows. I'm looking for a low during October and in this circle price range. Now, precious metal, well, energies, crude, heat, unleaded. So, crude's making a minor new low here, but it's for the last 2 or 3 months. It's also in the process of breaking a bull trend line. I'm expecting now, because things are not holding where they might have, and we're not that close to oversold either, I'm expecting a new low and a test of 67.5 and maybe even down to 63.5-ish very soon. Next, we have a bullish engulfing buy signal at the moment in natural gas, but it's kind of flimsy because the rally high is just barely above Friday's high, but it's a signal. And we did get a signal on the low day, August 28th. And every time you see green, it's a buy signal. They don't always work. That one didn't work. And we have stops in all the time, every single second that we have a trade on. This one worked fairly well, this red one. That one did not work, small loss. This one is working great, bottom of the market so far, and now a complementary new buy signal today. I'm expecting a rally back up to about 2.5 to maybe 2.6 and a half-ish, 2.650, and in the next couple of weeks plus. Now, heating oil, new lows. Buy signal made a little bit of money. Actually, it didn't. It had a small loss. And it is making new lows now. So going back to natural gas, it's the exact opposite. While heating oil is dropping down to new lows for quite a while. So I'm looking for a continuation of this bear move in heating oil. Now, we did get a sell signal almost at the top of the market in gold, and then we're going to look at silver and copper, platinum first, and then copper, which are behaving exactly like I forecasted months ago. This is a relatively new sell signal in gold, only a week or so old, and it's working great. We're still in the trade using this particular kicker. That is the speed at which the trailing stop moves. We call it a kicker. You can tighten it up, move it faster. You can slow it down, move it slower. And it is not a moving average or even based on, excuse me, a moving average. Two other features. So, great. It's doing great. Silver, new lows again. The head and shoulder top formation is working great. And I've outlined that in as much detail as I can since July, maybe even a little bit before that. But I'll say, early and mid-July. Head and shoulder top, inside a head and shoulder top, very rare. I am expecting a minimum downside objective of 24.5. Next, platinum. We've got that head and shoulder top inside of a bigger head and shoulder top. And on platinum, we got the top of the market to the exact day. I'm looking, and this has a new low for the whole trend now. I'm looking for a test and a break below 893.40, which is bottom of support, previous low area, and a minimum downside objective of 808. Copper, we had a couple of buy signals that work fairly well, but we're stopped out of those with a profit. Got up to resistance, which stopped the rally. Not quite overbought, though, but it's crashing today pretty damn big. And will support hold? I don't think so. I think this support area around 4.0 is going to get broken. And the next thing you know, we're going to be down. Where'd my crosshair go? I thought we had it on every one of them. Good. So I think it's going to come down to 3.7 and even a little lower, taking the next couple of weeks. Okay, now greens, beans, oil, meal, corn, wheat. And then we're going to go to cattle and hogs. So beans are working great. Outside update, bullish engulfing, August 26th. You see it, green right there. We didn't hold on. We got stopped out fairly quickly. I could have slowed the stop down, and now we would still be long. But it's up to the user as to how they want to advance the trailing stop on longs or shorts. Do it separately. If you want to tighten it up for some reason, you can go right ahead. If you want to loosen it up, if you're not stopped out already, of course, you could loosen it up, but I don't particularly recommend that. But anyway, it's very adjustable. And we had a great short-term small trade. Green at the bottom, that's what I really like to see. Green at the bottom on that. That one did not work. And we don't have any good sell signals here lately. So next chart, bean oil, green on August 23rd, out a few days later with a profit. Looks like it's dipping down some, not doing too much damage, a little bit to the bullish story. But the problem here is this trend is down. And last Thursday, we bumped right up against Friday, as a matter of fact. The high of the day was smack dab at my resistance levels, and now it's turning down. So I'm looking for lower levels at this point, no more rally, and expecting the bottom to be challenged and go below 37.24 and lower. Grains just don't seem to have quite enough follow through to start talking about a longer term bullish trend. We do have a good rally in soybean meal today, but it's in a pennant formation and it could stop at the bear trend line in the next few days around 330, 331, 2, something like that, and turn down. We're almost overbought now. So it might not even get to the bear trend line, the top of the pennant. And what can I say? I think it's going to turn down to support levels at 229. Sorry about that. And my alarm line went off just now. I'm lowering my volume. That was a little shock. So we have new lows on the indexes, or about to, and on that one, I think it was E-mini or Spider. Now we'll get back to it. Next chart, corn. Buy signals didn't work. Got to support, broke it a little bit, and then the low on these 2 days was exactly the same to the same tick. So we could have had, but we didn't, a bullish green engulfing buy signal, almost oversold, so close, and so close to a bullish engulfing, but it didn't happen. The rally is happening, and we're probably going to come back up to about 418, and I can't rule out 431, but I can't be very bullish. I think this rally is short-lived, going to stop fairly soon at either one of those two levels I just mentioned, and turn down to new lows for the trend. Wheat. We have a brand new buy signal today in wheat, and wheat we do have a little bit different story because we've caught the bottom of the market to the exact day, August 27th. We got a complimentary, as I kind of nickname it, buy signal after the low of the market buy signal, and that could push it up a little faster and quicker. Where? Well, at least to 580, which is not very far away. I haven't got much faith in the buy signals at this point. And maybe up to as high as 615, but I'm bearish intermediate to longer term. I still think this market's got a long ways to go down, even more. Next, we've got the cattle buy signal almost at the bottom, still in the trade given the kicker that we're currently using, and the stop is protecting a profit. Looking good. Optimistic it's going to rally a little bit more. Don't have a very firm longer term opinion on the cattle. Major resistance above the market. We do have these higher lows since last December, which is pretty good, 9 months now. So a rally. And hogs. Overbought the last week and a half. Not quite higher than Friday's high, or we would have a bearish engulfing sell signal at one point during the day. Right now it's up a little tiny bit. I'm looking for it to top out. I think hogs are about to roll over and start to head back down to the support area. Back to the E-mini. Low and last almost. Looking for lower levels. Chewing away at the lows. Spider about to make it. We just made the new low on the alarm line on the SPY. That's a new low for 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 days, about 2 weeks. That is not taken lightly. You guys have a great trading day and profitable trading to you.